Good morning, everybody. It's the 22nd of February. We are Signal Centre Talking Bull. I'm Joe, joined by Steve this morning. How are you doing, Steve?
Yeah, good. Thank you, mate. Not too bad at
Good.
all.
Excellent. Looking very smart this morning.
Thank you very much.
Not that you don't every day, of course, but
No,
yeah. Well,
no,
good. Right.
I was surprised I got up this morning after watching Liverpool last night.
What was the score in the end? I saw it was 2-2 at half time.
5-2.
Oh, Christ.
Yeah, bit of a
Not so good.
disaster. No.
Yes. You were in control, weren't you? Was it a mistake from Allison in the first half?
Yeah, I think they sort of it was first half was pretty even mistake from both goalkeepers. So, but Liverpool looked pretty good in the first half, but the second half they went 3-2 behind and then sort of just went for it.
Right.
Yeah, and then made
Ego, I
mistakes.
suppose.
You can't make mistakes against teams like that.
No, indeed. Okay, well, let's get on with the show then. A fair few headlines to get through. If anybody's watching on YouTube and TradingView, if you've got any questions or any markets you want us to look at, please feel free to post them up. Hopefully the stream's working. I'm not sure if I'm having some issues with it my end. Can you see it running live,
Yeah,
Steve?
I'll have a little look while you're chatting away.
Okay, so headlines then. Let's bring those up. So, as I said, a fair few to get through. Let's start off with the Eurozone PMI data, which was out yesterday. So we had services data from the UK, Europe, and the US yesterday. Eurozone manufacturing sector edged lower to a 2-month low of 48.5, so still in that contraction phase below 50. That was also below the consensus forecast of 49.4. The input for manufacturing increased at its slowest rates in September 2020, but there were stronger increases in services, while overall increase in output prices remained very high, but at a slightly slower pace than seen in January. In the UK, the PMI number improved to a 7-month high at 49.2, again still in that contraction phase below 50, but this was well above the expectations of 47.5, so it's a pretty decent move in sterling yesterday as a result of that. There was also a strong improvement in the services sector, which hit an 8-month high at 53.5, and again above consensus forecast of 49.2. So the data, all in all, eased the fears over a UK recession, which again explains why we saw that strength in the sterling currencies yesterday. In terms of the US, their PMI manufacturing index improved to a 4-month high at 47.8 from 46.9 in the previous month, and slightly above the consensus of 47.1. There was a smaller decline in new orders. Input prices increased at their slowest rate since October 2020, but there was a stronger rate of increase for output prices, and overall business confidence increased to a 9-month high. As a result of all of this yesterday, US yields moved higher after the PMI data release, with the 10-year yield close to 3.95%, which is its highest level for over 3 months. And the dollar posted net gains after the data release, with dollar yen testing resistance above 135. We had Canadian inflation data yesterday that hit an 11-month low. So again, further signs that potentially inflation has peaked, and we're starting to see that unwind now. So that was at 5.9% from 6.3% previously, and below the consensus forecast of 6.1%. Overnight, we had central bank action, this time from the Reserve Bank of New Zealand. They increased interest rates by a further 50 basis points, taking the overall rate to 4.75%. This was very much in line with the expectations. And the RBNZ expects rates to increase further, with a projected peak at around 5.25%. So all eyes on today then, and pretty much the main event is the Fed minutes, which are due out this evening at 7 p.m. Minutes from the January's Federal Reserve meeting will be released later. At the meeting, there was a rate increase of 25 basis points to 4.75 overall. So we'll see if there's anything else within that will give us some guidance on what to expect going forward. Okay, so let's get onto the charts. Steve, if you want to kick us off with a look at Bitcoin.
Yeah, sure. Looking at the daily chart on Bitcoin, we've reviewed the weekly chart in the previous shows this week. Like a bearish day, bearish dark cloud cover yesterday on Bitcoin. So we've got a potential for a double top formation on the daily chart. So a bit of a short-term correction. 23,800. That would be around about the level just above there. Where let's draw the neckline in. Let's get an exact level. Not just about there, Steve. But I quite like it if we take it from this high here as well. 23,815. and we can see we drop down to here. We've got the two highs either side of this drop, and we've attempted to break through that this morning, and it's failed. So little bit of a pullback now. Looking at the 4-hour chart, we've got still in an upward trend on the 4-hour chart. You can see the cloud providing support there. And on the hourly chart, we have broken through that same indicator. The cloud is a really decent indicator for showing you the trend on whatever time frame you're looking at. And we've broken through, looking pretty good, looking decent now. And yeah, you can see sort of like the bearish resistance that we face in the future as well. So I think really sort of like looking at those levels is really key for it today. Really needs to sort of like claw its way back to above the 24,750 level to stave off these immediate negative bearish conflict. I don't know what word I'm going to use for that, but I'm sure there is a word out there. Let's take a look at Ethereum. Same sort of thing, potential double top formation, even a triple top formation. Got a high here. Let's put a downward arrow there, and we'll copy that. And here, where is it going, Steve? It's going all over the place, mate. One there and one there as well. So really, and we got these lows in between. So you've got this low here, which provides a good neckline, and also this low here, which is even better neckline. So you can see we're in bearish territory for Ethereum on the hourly chart. Getting the trade going below 1632 will really open up the downside. You can see we've probably got some sort of volume gap to look at. Get that indicator up, although it is already there. That's the sort of thing we're looking for. That's where you get the break and the fast move. So selling a break there, not a bad idea, but obviously keep your stop tight on these cryptocurrencies. They're tough at the best of times. XRP, also same sort of price action that we've seen. We've got the highs and we've got the neckline in between, and we're breaking down, and we've got this vacuum area. Wouldn't be surprised to see a break down to 37.38 if we manage to get below this low on the 2 o'clock candle. Taking a look now at, let's move across to commodities and gold. Looking at the daily chart again, breaking down from this bearish flag formation, seemed to have stalled last Friday and rallied higher. This bullish hammer type candle here. Price action yesterday was yesterday was bearish. We got down to 1830, but managed to rally from there. Trading at 1840 at the moment, but definitely under pressure. And again, all based around the dollar up around the 104 level on the dollar index, and looking quite tasty at the moment. So if we do manage to get a little bit more of a push higher there in the dollar, then we should see gold breaking down further. Crude oil is had a bearish day again yesterday. We did see some sort of reprieve on Monday after a week of negative price action. A little bit of a pullback on Monday, but turnaround Tuesday played out, and we're now on to last week's low, which was 76.47, and a breakdown from there should open up the downside even further. Well, 75.29 was the actual low last week, so it's trading around 75.48 at the moment, so not far away from there. Next level of support to watch is 72.58, then 70.21, and obviously we've got major resistance above at the 82.61 level, and in front of that we've got 80.72, which was last week's high. Brent crude oil, same sort of price action. We're breaking down on the daily chart and forming some sort of symmetrical triangle formation actually, so we should really watch that. But above we've got resistance coming in initially at 86.69, and above that we've got 88.97. We're breaking through intermediate support here. Next support coming in at $79, 77.60 and 75.26. They're the levels to watch on the downside. We should see some action there. Natural gas. Oh, I did mess up yesterday, didn't I? Trying to go for the win, expecting a turnaround after a good day on Monday, and it sailed through the support. Daily chart continues to break down. The 135 is going to be hit at some point, Joe, I'm sure. Hourly chart looks pretty sick. Once it broke support, our stop was just below here, around here, which was a great place to have the stop, because if the trade's wrong, you limit your losses. So yeah, this potential inverse head and shoulders formation didn't really get up above the neckline that it needed to get some momentum, 236, and broke down. So yeah, leaves a little bit of a messy picture on the natural gas. I'll take a look at indices in a second, but let Joe show you through the currencies.
Yeah, absolutely. Let's get on to the dollar index to start with, as always. So we can see here that prices were pretty stable yesterday, pretty buoyant. We did actually gap higher on the open yesterday and continue to hold above this newly formed support of 103.62. So while that remains the case, I think it kind of increases the chances of a correction to the upside. I've got 38.2% fib level here at 106.15, which is my short-term target. So that is a measurement from the highs that we posted in the dollar index back here in September down to these lows that we posted in early February. So that for me appears to be a reasonable area to expect prices to go to following the break of this short-term downtrend and prices kind of consolidating above this newly formed support. So looking pretty good for the dollar as it stands. If you look at my watch list on the right hand side, you can see some pretty ugly losses to start the day on the Aussie currencies, suggesting that there is a bit of risk off appetite around the markets at the moment, but we'll go into a bit more detail. Let's take a look at euro US dollar. So yesterday, off the back of the PMI numbers, we saw the euro decline against the US dollar. It's still holding on to this support level. We've got a 106.48 for the time being, although there was a minor close below that level yesterday, trying to hold on to it today. So if we do get a breakdown here on a closing basis today, or maybe even take out this low that we posted last Friday, then I think it elevates the chances of a deeper correction. And again, I'm targeting the 38.2% fib level, which is down here at 104.60. If we take a look at cable, as mentioned earlier, sterling had a reasonably good day yesterday on the back of the PMI numbers and the reducing fears of recession. So we can see there's a decent green candle posted yesterday. Still not removed the threat of this potential double top just yet. So we've got a top here from back here in December, another one from January. We've got the neckline of this potential pattern coming in at 118.42. If eventually we see a breakdown through this level, then we will expect lower prices. But for now, we are trading within this range, and therefore more sideways and choppy price action can be expected. If we do take a look at this sort of shorter term price action here, we have seen the break of trend, and we can actually still see visibly that we've got lower highs and lower lows in this short-term period here, which does indicate that we are in a short-term downtrend. One thing that we may want to consider is that this is trading in some sort of consolidation sort of triangle potentially, or a wedge pattern, which will have the potential to break out to the upside if we can get somewhere above maybe yesterday's highs and close above this this wedge. Then that just may indicate that what we have here is a continuation pattern, and we may see a break to the upside. But it's pretty mixed at the minute, and not really giving us too many clues about where the next price movement will head. So let's take a look at some of the other dollar markets. We can see here that dollar yen closed above resistance yesterday at 134.65. We saw a nice close above that level. Previously, we did see some stalling in and around that zone, but we got a close above that yesterday. And we're seeing a bit of a pullback to that level today to retest that newly formed support. 38.2% fib level, slightly above at 136.66. That would be a kind of natural target following this downtrend channel break that we'd be looking for on the upside. So still looking pretty good for higher prices there. Looking at dollar Swiss, so a bit of a mixed bag here. Posted a bullish engulfing candle yesterday, but still unable to take out this resistance at 92.06. And until we can do that, we may continue to see more sideways choppy price action there. Let's take a look at dollar CAD. Decent break to the upside there yesterday, above 134.84. So that's the highest close we've seen for a while now, going back to mid-January. But again, Still pretty choppy, to be totally honest, but that is a pretty good move to the upside. A pullback to maybe retest those newly formed supports could maybe provide some opportunity to trade to the next resistance level above at this kind of range here. So potential there to try and take advantage of that bit of white space on the chart. I'm going to take a look at some of the Aussies now, just because they look quite interesting. So this is Aussie US dollar. We've seen a break of trend. We saw a consolidation / continuation pattern form here, and prices have broken lower. Posted a bearish engulfing yesterday, and prices on the slide again today. Some people were asking about Aussie yen yesterday. This was one that I had a big head and shoulders top pattern drawn on. We then saw this corrective channel, which gave us a bit of the run around. Didn't really work into the neckline, and we've actually overextended that to the 50% fib level from the measurement from the head down to these lows that we posted in December. And we appear to have stalled at that level again yesterday, and posting some nasty red selling price action so far today. So we've got some support here at 91.92. If that breaks on a closing basis, then it's, for me, likely to trigger a correction down to the lower end of that channel and potentially give us a bit more encouragement that this head and shoulders pattern is actually going to play out to the downside over the medium to long term. A bit of a turnaround in Aussie New Zealand dollar. So these two generally quite closely correlated, but we have seen a very strong period of Aussie outperformance. But in the last couple of days, bit of a turnaround here. So we posted a bit of a reversal candle on Monday. We backed that up with a similar looking candle yesterday, and today we've seen a pretty chunky move to the downside, probably triggered by these the overnight rate hike from New Zealand, the RBNZ. But we've also seen a break of the short-term uptrend here, maybe indicating that we've got a bit of a wedge formation, which could trigger further losses to the downside in the short term. So that looks quite interesting as well. Not generally one I trade too much, but yeah, looks quite interesting. Don't know if there's any other requests for FX. I know we're struggling with the stream on TradingView today, which doesn't seem to be working. There is a link on our bio there, which will take you to a live stream. I'm not going to mention where it is, because I don't want to upset our friends at TradingView, but you can still watch us. And if you do have any requests on FX, feel free to send them over. I'll leave it there, Steve. Maybe you can show us through the indices.
Thanks, Joe. Yeah, we're taking a look at FTSE, and FTSE seems to have reversed. We were talking about this from Ellie wave theory. We look at like 3 waves up, 2 waves down. So this impulsive move higher looks to have topped out at just above the 8,000 level and reversing over the last couple of days. We did get a stall on Monday, and we've confirmed that sort of like this bearish feeling and breaking down through support at the moment, 79.30 trading. Further downside, it wouldn't be a surprise after such a aggressive and acute rally. So it's just normal market conditions, really, as far as FTSE is concerned. DAX looks a bit toppy as well, and there's potential for a double top on DAX. We're looking at, well, let's call it a treble top again. Why not? Let's bring all of the tops in. Be great to have 4 tops, wouldn't it? What a great time that was in the music world. So here we are. We've got the high from the 2nd of Feb, the high from 9th of Feb, and the high from the 16th of Feb. And we've got the neckline in between. So we've got this level of support between 15,270 and probably 15,240. And if we do manage to get a break below there, we should see a measured move, or we should see an aggressive move to the downside as price gives up, and targeting a move to 1480. 40,800 rather, which isn't sort of like far away from the swing low from the 19th of Jan. So that'd be a decent level to look at, and also that'll tie in quite nicely with that sort of level from back there. So 14,925, quite like that. 55-day moving average just below there at 14,820 as well. So for me, that's a potential for gun to head. I've worked out a way of doing it on the gun to head trade ideas, which we struggled with on Monday. I can flick to it quite quickly now to show you why I'm so disappointed, because the idea we were looking at was something along the lines, oh, it's gone. Actually, it might be on the original chart. Let me just bring this up again. This is the sort of trade I was looking at Monday, trying to get it on, Joe, and didn't manage to get it on because of like margin or something like that, or the calculator didn't really work it out correctly for me. And it sort of like hit target and rallied all the way back up to the level, and it's continued to move lower. So on this chart, we've got to ignore that and move on. We've got obviously got sort of like a decent level down here at 15,290, which we just talked about, and a break below there should open up further downside, especially if we manage to get below the 15,240. Yeah, we're negative on the hourly chart. We're below the Ichimoku cloud. On the 4-hour chart, we're below the Ichimoku cloud, so it sets up a nice potential short-term top. Looking at Dow Jones breaking lower, obviously we've got the Fed minutes later, potentially won't be great news, and maybe spook a few markets then. We're in positive territory as we trade at the moment. We're just above positive on the day on Dow, Nasdaq and S&Ps, but we're down below the 55-day moving average at the moment, broken down through there. It's acted as support quite nicely over the last 3 or 4 weeks, broken down, approaching the 100-day moving average and support here, but nice momentum going into this. It'll take a lot to turn it around. Also, Nasdaq looks like it's posting a double top formation, breaking down through the neckline, 12,200. I expect we'd see resistance there if we manage to bounce it there, and that wouldn't be a bad place to fade it and go for this correction. S&P, similar sort of price action, but under more pressure, down at the 4,000 level, good psychological level for the S&P, and negative overall. So, yeah, for me, that looks pretty much it. On the indices front, I'm rushing to try and get a gun-to-head trade idea on, but why rush? It's not going to go anywhere. I don't know if you want to cover off the sterling yen, Joe.
Yeah, absolutely. I will do that for Ali, who's asked about sterling yen. So we'll get to that now. So this was a topic of conversation yesterday as well. So we were talking about the potential outcomes for what could happen here. And I highlighted this band of resistance on the daily chart between 162.33 to 163.02, because there was a fairly big line of resistance there in black. And above that, we had the neckline of this, what looks to be a top pattern. And it also married up with a 38.2% fib level as well. But because we had such good data yesterday from the UK, and we are hopefully going to avoid recession, there was a lot of good feeling towards sterling yesterday. And obviously we've seen a lot of yen weakness of late. So there's a really strong move yesterday actually through this resistance level. So we can get rid of that now because it hasn't worked. And we can now potentially look at trading this from a different direction. So from a technical perspective, following a breakout there at 162.33, what we would now like to see is a pullback to test that newly formed support at 162.33. Hopefully that will attract fresh buying interest, and then maybe we can see a continuation move to the upside. So we do have this short-term downtrend which we need to consider. We've only got 2 touch points here, or 3 touch points actually. If we zoom in, we can see one first touch point here, then another one, then another one. So that does confirm it for me as a downtrend. So if we may run into some resistance here into this kind of level, but given the strength of this kind of bottom pattern that we've put in place here, we could see easily a break to the upside here, and that is a really strong move yesterday. So pullbacks I'd expect to be limited to around 161.74. We may see a bit of an overshoot of that neckline there because we do have the highs and lows of a few candles in here that may do a job. So I would expect pullbacks to be limited to this kind of range. If this is indeed to be a bottom pattern, you'd expect buyers to want to step back in this kind of range here and then potentially look for higher prices. So certainly looking a lot better than it did yesterday, now that we've taken out those major levels of resistance on the back of the PMI numbers yesterday. So yeah, looking pretty good on sterling yen. Steve, let's have a look at guns to the head trade, shall we?
Yeah. Wasn't great yesterday, I think.
This is where Steve and I pick trade ideas live on the stream as if we had a gun to our head. What would we trade right now? Each of the ideas must have stops and targets. They must have risk reward ratios that are better than 2 to 1. We place them at market, and these ideas will expire at 9 p.m. UK time. Or of course, if the stops or the targets are hit before that, then the trade will be closed. Now, because the trade ideas are at 9 o'clock, it does mean that we are going to be trading or holding these positions potentially over a major event today, which is the FOMC minutes. So that could create a lot of volatility towards the close of the session. but we still have a gun to our head anyway, so we've got to do something. If we take a look at what we did yesterday, I traded Euro New Zealand dollar, which was 0.21 R on side at the close. So could have certainly been a lot worse, but also could have been a lot better because there was some decent price action on that yesterday. Just bring that up. It was posted to the TradingView profile. So we can see here was into a level of resistance. I was hoping for a bit of a swing failure, looking for a pullback there. If we click the play button, we can see that that level did a really nice job as resistance, but at 9 o'clock, it was only 0.2 R on side. And you can see early on in the session, it did have a really good move down. There's a couple of R on side on that. But that's the name of the game. These are set and forget trades. So yeah, no micromanaging going on there on an intraday basis. Steve was looking for a correction higher in natural gas, looking for a short-term bottom to complete, and it's just been a real horror story for natural gas. There are no willing buyers on this at the moment, Steve. It would appear it is pretty much one-way traffic. But appreciate the attempt at trying to have a go, because the risk reward when trying to trade counter trend can often be far greater, and you can achieve those quite quickly. But of course, they are much higher risk. So, Steve, we're going to reload the gun and have another go today. Have you got anything ready for us?
I was ready about 5 minutes ago before we started talking, Joe, but
sorry, mate.
good,
Do you want me to
gone
go?
now. Yeah, go. Yeah, it might have a little rally back while you're chatting.
Yeah, okay, let's see. Right, so I'm looking at dollar yen. So yesterday we saw a close above this resistance level here at 134.65, which I think is quite encouraging. Suggests there's a bit of dollar strength, also combination of yen weakness. Looking at the price action here, we saw the break of the bearish trend. We then saw this triangle pattern which broke to the upside, and prices have been continuing to move higher since. Come up a little against that resistance there, as we know. We broke above it yesterday, closed above it, seeing a bit of a pullback into that level today. So from a technical perspective, I'd like to see that level hold and for prices to continue moving higher. Now, it doesn't look as attractive on the hourly chart, which is typically where I execute these trades.
It's above the Ichimoku cloud, though, mate. So,
is it? Okay.
Yep.
So the cloud's giving me some support as well. So this is the hourly chart. Just going to try and refine the entry here. So I want to buy that at market. And now I've just got to try and work out where my stops and targets go. So I'm going to try and use a few indicators to maybe suggest where prices may go. So this is reasonably supportive, suggests that most of the price action was down here. We have got some volume building here. I kind of need this level here to hold, because if it breaks below that, there's a bit of a vacuum there that may suggest that prices will go lower, but that makes my stop pretty big. So let's go with something like that as a stop. 133.89, Steve. So you can get that loaded up for me, and then I can try and find an upside target. So there's a previous volume point of control up here. And if I zoom into that, we may be able to find some resistance that's sort of hanging around there. So 136.72 is going to be my target.
Yep, nice.
Which gives me a risk reward ratio of just under 2.5 to 1.
Yep, 2.48.
We're on. Okay, so I'm long at dollar yen. Entry around 134.69, stop 133.89, target 136.72. We do have Fed numbers later, so minutes, so it could be pretty scary a bit later on. Over to you, Steve.
Cheers, Joe. Just showing you that on the Oanda.
Oh, brilliant. Thank you. Yeah, so this is live now, by the way, guys, for anyone new watching. So we've put £2,000 into a trading account. It's not been a great start for us. Down about £140 from when we started. We're risking 1% of capital per day each, so up to 2% maximum. And generally risk rewards are around sort of 2 to 3 to 1. So on a good day, we could put a big mark back on that account in green, but we need to have a good day, Steve, because it doesn't feel like we've had one for a while.
It doesn't, does it? So I've worked out the best way of doing this. What we do is we look at the account for £18.56 I'm going to risk. So if I put risking £18.56 in here, Joe, then that gives me my stop. My take profit is there. I'm just going to sell it and put it on, just so it is on. It's like move it. It's the stops there and the trades on. Did that do the right thing though, Joe? That only looks like it's risking £14.79.
That may be just to the size issue.
Yeah, it shouldn't do. I mean, if we move that to there and the stop, if we move the stop, are we going to move the stop grabbing the line? Orders, let's move the stop from here. Stop loss down here, edit. There you go. That's risking £18.49, is that right? Or do we have to take the £1.38 off? I don't know. That was pretty much where I wanted to do it, and the target, the take profit target, we'll edit that down to 15,000. Gives us 2.85, but I was quite happy with the.
You've got the trade on, right?
Yeah, the trade's on, but it just sort of like didn't really give me the right.
You've got 0.2 on.
Yeah, but it didn't really give me the right levels. There we go.
You're trading it again?
No, just adjusting the stop of the target
Oh, right, okay.
to make it to make it right, because when I put the trade on, I said risk £18.57 and it only risks £14.70 or something.
Right, okay. I imagine that's down to positioning. So if you change that to 2 point, maybe you can trade it in 0.1 increments.
Well, it said you can trade it at 0.2, and it allowed me to put that £18.57 stop in.
Okay. All right, well, let's see if that works.
Yeah, let's see if it works. I'll have a little look at that, and I'll publish it with the right risk reward anyway.
Yeah, I mean, obviously we are doing these trades on a real account. So obviously there are restrictions that occur. There are costs that occur that don't when you're running these things on a hypothetical basis. So it's good to showcase these things. People out there with small accounts will have come up similar sort of issues. If you're trying to risk a certain amount of capital, sometimes it won't allow you, or come up with a smaller trade size in order to go below that sort of maximum level of risk that you're willing to accept. So these are things that we have to face on a daily basis. But those trades are on. We've got a long on dollar yen, we've got a short on DAX. Let's see how they go. Okay, so data-wise today, we've got a couple of bits out. So we've got German IFO index, which is due out in just over 25 minutes. And then the big one today is the US Federal Reserve minutes, which is out 7 o'clock UK time. So that will be well watched. Obviously, we know interest rates were hiked at the last meeting. So we'll see if there's any other commentary on there, which gives us some guidance about what to expect in the month ahead. With regards to the rest of the week, on the 24th, we've got the US PCE prices index. That's another inflation metric that we'll be keeping an eye out for in the US, and that's going to be on Friday. And then we look forward to next week. So a pretty quiet start to the start of the week by the looks of things. And then we're into US ISM manufacturing, and we'll also have non-farm payrolls next Friday as well. Okay, so that is it from us today. Thank you, everybody, for watching. Apologies for the issues with TradingView. Hopefully that'll be fixed tomorrow. But for those that did tune in via alternative methods, thank you for coming, and we will hopefully see you tomorrow morning.
Cheers all.
Bye-bye.